Yo, what is up guys? Welcome to another video of Bullish and Bearish trading. Today we'll be discussing top major key terms for learning how to trade, learning how to invest, whether it be through Robinhood, Webull, any platform. This is all for beginners, so stay tuned for the video and let's learn some stuff. So, let's see. First, we're going to learn the difference between trading stocks and investing in stocks. So, when you trade, you either buy a company that let's say today I bought this company, and let's say I put $3,000 into Apple. Apple goes up, I get a $50 profit, and I sell for that $50 profit that same day. Or I could swing trade it for maybe, let's say if it runs a couple days and then it starts dipping, I sell that and take the profit from it. So that is what is basically called trading. Then we go investing in the stock market. So investing in the stock market is way different than trading. So you can sit by a desk and look at charts and try to take profits really quickly. You basically go with it's called blue chip stocks. So blue chip stocks are basically stocks that have been around for a while. So let's say Apple, Microsoft, Tesla, um, Sony, and things like that. Those are called blue chip stocks that maybe have been on an uptrend for a really long time, and also they're really good for long-term investing. And let's say you leave that there for 10 years and you get a big sum of money. But for investing, you're gonna need a lot of money. You're gonna need at least $2,000 to make a big impact in your financial statement. So next key term is bullish. So when you're bullish, it means that you are hoping for the stock to go up. And then that's just basically in my title. So let's say let's see right here. Let's give an example right here. Morgan Stanley Bank is getting bullish about biotech. So they're bullish on the stock that's going up. So they want the stock to go up, and they think that the stock is going to go up. And then we have bearish, which means that the stock right here, bulls think the market will go up. So, and then bearish, which is the opposite of bullish, means that you think that the stock is going to go down. So you could either short the stock, which you basically gain from that, or you could buy a call and then um, hope for the stock to go up and get a contract for that. Um, so that's really what are the four big things to learn. Also, when you're trading, you gotta learn a lot of charts. So a lot of candlesticks. So let's say we go to right here. So let's go to the stock that went tremendously up today. So as you can see here, you see this right here. So if you take a look here into this stock right here, we see a huge rise, and that means that the volume has gone up. So we got to look at volume. Volume is basically how many stocks are being traded that day. So if we look here, so let's say right here. So let's say 1 million people just get into that stock right away. That stock is gonna go push up. People start selling that down, more and more up, which is the volume. So let's say the volume is rising, but the stock is going down. That means that a lot of people are selling. So that means maybe an indicator to get out before it starts dumping. Also another good term for this is so let's say this stock. So maybe it's a pump and dump. So basically, what pump and dumps are when a lot of people start buying, and the stock gets pumped basically. So it basically just keeps going up and up and up and up. But that's not the true value of that stock. So let's say the stock is worth 25 cents, 45. Let's say 45 cents, and it starts going up, 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 and people start keep buying, keep buying, keep buying, and it pushes to $1. 50% of the whole stock has gone up, of a whole share. So here we see a downtrend, which is basically this is the pump, uptrend, and this is the dump, the downtrend. And that's when everyone starts selling because it's going down. More people start selling, 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 and maybe that then we keep on seeing an uptrend like this. This is steady uptrend, and that's very good, which means that it's not just a pump and dump. It means steady gains, but just because it's just steadily going up doesn't mean that it might be a pump and dump. It's slowly just going up, and then it will fall back down the next day. Another big thing that people don't understand about the stock market is be patient. Be patient. So let's say here, um, so let's say this is another good example. So you see this, and then you start going down, 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 and then you're panicking, and you're like, oh, this stock is going down. Um, you're you're you think it's gonna keep going down, but it then it starts to rebound up, and then it remains at where it usually was standing. You gotta be patient. So let's say it's only down a couple. Let's say you buy at 6.45, and then it gets to 0.46. You're like, oh no, I gotta take this profit. So it's better to wait and see if it maybe starts to rebound up back again, instead of just taking the profit right then and there, or even losing the money. So it's better to wait for a rebound or take a small loss. So let's say it keeps going down, and then it goes down below 0.45, and then it goes down 0.40. That's when you start to realize that this stock is going to start going down really fast. So you sell and take that small loss and look for another opportunity. Also, another example that I have here. Every reaction is an overreaction in the stock market. Every reaction is an overreaction. So here we see Datadog. This company is really great. A lot of good things about this stock. This it's basically IPO'd about a year ago, and it's just been on a steady climb. Great climbs here, but as we see here, it reached its peak, and it went and almost reached $100. As you could see here, the 52-week high was $99. So when it reaches $99, we get to earnings, and basically the stock starts to drop down because um, their revenue was good, but they said that they weren't expecting a strong revenue next year due to COVID-19. So the stock starts to drop down, and people start selling, 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 selling. But then we see that it starts to rebound back up, and it starts consolidating at around $85, $85, as you can see here. So it gets to $86, and it drops back down a little bit more, but that doesn't mean that it's done increasing. Um, it just means that it maybe people took profits and etc. Um, but this is a great example of that every reaction is an overreaction, because this company posted great revenues not only for this quarter but for last quarter, and it still has a strong um, days ahead of it. I mean, not only that, but maybe we could even surpass this 52-week high and go to even new highs. You know what I mean? Um, this is a great example for that. Also, please, know how to research. So let's say we have JDST and then JNUG. So these go based on the price of gold. These go based on the price of gold. So let's say you want to buy into JDST just because it's going up, and you're like, oh, let me make money. but then you don't check the price of gold, and you're just like, you don't know what you're doing. So please make sure to research what that stock is, because maybe let's say that stock is um having a lawsuit, and then that lawsuit a week later it starts to pop up back up again, and then that lawsuit gets through, and then the company goes down completely. Um, so please know how to research um, what you're doing for any stock. Please know what to do. Don't only buy because it's going up. Don't only buy because it's going down. Um, Before you buy or sell, know what happened. Know why it's going up. Know why it's going down. Is this an overreaction, or is this a good reaction? You know. Um, is this stock reliable? Is this like, let's say for this one, this stock, it's, this graph doesn't look good, and then we compare this to Apple, which is a great company, and then we just see it, just major uptrends. You see, so we start $113, just big uptrends, big uptrends, big up, just uptrend, uptrend, uptrend. Obviously, we see dips here and there, but it's, look at the difference between this, and then this. So know that it's very important for you to know all these terms. Um, very important. So also, um, stock trading and investing. Please know the difference between that. Um, don't get impatient. Know what you're doing. Research. Do your due diligence. Um, watch YouTube videos. Um, don't just get into stocks just because of how they look. Um, a lot of times people make the mistake of being impatient, and then that stock just starts rocketing up. Um, don't only go into a stock for absolutely no reason. Also, another big important key thing is buy low and sell high. So let's say this stock right here. Let's say today you're like, oh, you just see this here at 0.50, and you're like, oh, this stock is great. It's gonna keep going up, but you don't realize that this stock has gone up almost 15-20% that same day. Um, and you're like, oh yeah, let me buy in, and then once let's say this climb doesn't happen, and then it just keeps going down. You need to realize that have a rule where you can't buy at a certain amount. So let's say this stock has gone up 5% that day. Do not buy it because maybe it could start going down. Let's say a stock is a good stock and it had a catalyst, and basically it's bound to go back up, and it's bound to have such a good increase. Right there, you buy right here, and then you just seek the climb. You just ride the wave. I'm not talking about, maybe not this specific company, but maybe another company, like let's say Apple. So let's say you bought right here when there was a dip, and then you just ride this whole wave until it starts dipping again. Um, Maybe not with this company because this is a great long-term company, but let's say with JNUG. So you buy right here, and then you ride all this up. Um, Buy low and sell high. That is one of the most important things you know. As long as every reaction is overreaction, please remember that.